The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, excuse me, from TFNN. Welcome to the April 3rd, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out with the bulls and the bears what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. Let those fingers do the walking. Just go ahead and send me an email, steve@tfnn.com. Inside the subject heading, just put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on maybe Turnaround Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 130 points, straight out at 23,767. You've got the S&P up 8, 2590 is the print. NASDAQ 100 up about 5 points, 6395. Russell's up 9. That's about 0.6% to the upside. Semiconductors and the transports are leading the charge. Trannies are up 1 3/10%, 135 points. And the semis are up 1 full percentage point. That is $12 and change. To the downside, you've got the spot volatility index off $1.50. Gold is down $9. That's nearly 0.7%. Silver up 1.5% or 25 pennies. Light sweet crude up 48 cents. Leading the charge here to the upside dollar-wise. It is Spotify up $30 over its offering price, I guess, out there. So this started trading just in the past half hour, I believe it is. Booking Holdings up $29. Tesla up 13. Again, Pharmaceuticals up by $10. That's 21%, by the way. To the downside, Mercado Libre. Mercado Libre's down dollar-wise, so not much really big to the downside. Mercado Libre's off $5. 2U Inc. Okay. That's down 476. International something or other. ISCA is a ticker symbol off $4. Coherent Inc. down 4. So a lot of equities to the $4 level to the downside. So let's take a look at let's go take a look at the equity futures markets out here, because the market's doing what you already anticipated, right? I mean, you called it yesterday when you saw the volatility index up in the 20+%, 25%. End of the day, I believe, was 18%, slightly over 18%. And you said, hey, you know, there's Steve-O's one-day rate of change deal out here. So you have to anticipate that the equity futures market, and that's what, if you use that tool, it's really designed for those people that are trading equity futures, because first of all, it's designed for a couple things. One, those people that see large down days, and I get this, I know the emotion, you're saying, okay, that's it, the market is going to go crashing lower. So it is to stop you from going ahead and entering into a short trade out there. It is instead saying you may believe that you should go to the short side of the trade, but wait for some type of counter trend rally. For those of you that trade the equity futures contracts, whatever the time frame is, it's to anticipate what the market is going to do next overnight into the early morning, which is to at least bounce. How it's going to play out the rest of the day, that's a whole different thing out here. And that's what you and I are going to go analyze right now, or try to analyze exactly what the market is doing. So the first signal that the market was going to bounce yesterday afternoon was the two patterns inside the NQ. And to a certain extent, with regard to what these markets want to do, it really is all about the NQ. That doesn't mean we ignore the other markets out there, but really the NQ is going to have to be the unanimous vote out there. If the NQ does not give us a unanimous vote, the market will continue to move lower over time. We'll take a look at that as well. When we take a look at the 30-minute chart here for the NQ, we just simply start out here at about 3:30 in the afternoon. Is that 3:12? Yeah, 3:30 in the afternoon. That was back on, looks like March 29th out there when we saw the NQ. Was it the 29th? Pretty sure it was. I hate when this system does that to me. Doesn't let me exactly grab the date out here. I'm going to go with Thursday. Yeah, March 29th. Okay. Phew. Now, what we can see here is the market, if we start doing our wave count, by the way, Basil Chapman is giving a workshop tonight, and that means if you have not been to one of his workshops, you should go over there and sign up for it. And don't wait. Just simply go do it to now. You know, it's simple. You get to test drive his newsletter for the next 30 days. You get a great education out here. And he's going to be talking about the fourth peak or trough, peak D. In this chart here, one of the tools that I love, and it really was brought to my attention by two of our denners, Mr. Z in the Tiger's Den, Saratoga Bob, and then obviously Basil. Now, it's taught differently than the way that that Basil will teach it. So you want to go get his way in tools. But even though he's going to focus on that fourth wave, we like to believe, and we know, that the markets sing like Stevie Wonder in the key of G. And when we get to that letter G, or that seventh wave move, in this case here, when the NQ made its bottom yesterday, that's what it did. It did two things. It was making its move to that seventh wave to the downside, and what it was doing was it was moving lower with less relative weakness. You like to see when multiple patterns come together out there. And then it was the bears, it was the cavalry, as Stevie likes to call it, that came in at exactly 1,500 hours. That would be 3 o'clock. If you were trading the equity futures on a short-term basis, you must be paying attention to this. You must then start to say, okay, the market is communicating to you. The market is telling you it's getting ready to bounce. To bounce where? At least to Stevie's red line. And then if it moves above Stevie's red line, it says, okay, I've got more bounce going on. Well, if we take a look at the NQ right now on a 30-minute basis, since that low, we can see that the high that it's seen this morning, this afternoon, was when it also got to that seventh wave move. So if we see the high of today get taken out, that's a really good indication the market has recycled and will continue moving higher. The next question that you would ask is, well, whether higher to where, Steve-O? And we'd have to take a look at a couple different things. First, as I take a look at this chart, I'd say about the 65-70 type area. That would be the initial target. We'd also want to go take a look and see what's going on with regard to the market profiles out there. That's on a 30-minute chart. So you've got the same. You don't have the exact same pattern that we had yesterday at the lows at 3 p.m., but you have one of the two patterns that are out there, and they're one of the patterns that you simply make sure you pay attention to. Now, in this case here, it was a choir of equities and the equity futures contracts on a 30-minute basis that, in essence, were doing the same thing. And for those of you trading the ES Mini, well, as we take a look at what it has done today in making its high, also singing in the key of G. Is the high put in for the day? I don't know, but we'll go check a look at some of the other tools that Stevie likes to use to help answer that question. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th,
2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timer's Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now it's up about 1:15, and so a couple of folks in the den wanted me to just discuss the Timer Digest issue that came out this morning, and in that issue, you've heard the commercial where I had mentioned that through January, middle of January, that in gold I was ranked as #1. Now, the only what the requirement inside of Timer's Digest, first they've got to decide that they want to track your newsletter service, and then secondly, they won't report on you until you've had 1 year's worth of information. I began that process last March. I decided to challenge myself and say, hey, where am I amongst the list of all these great newsletter writers across the nation? The reality is I've been able to, and the tools that you and I use out here are the exact same tools that I use to make those calls. So with regard to the S&P 500, for the last 12 months, I'm listed as #1. For the last 6 months, listed as #1 in the S&P. For the last 3 months, listed as #1 that is out there. Now, I would have not had this opportunity had it not been for Tom O'Brien. So the real kudos go out to guys like Tom, go out to guys like Basil, Larry Pesavento, David White, Bud Rolfs out there, and many others that have influenced me. You know, it took a lot of energy. Tony Robbins, as an example, this is a game about being able to mentally pull the trigger out there. And the cool thing is that not only am I #1 in those levels out here, but also still maintaining that #1 position inside of gold. The only other thing that they track out there are the bonds. At one point in time, I was #3, but bonds kind of have stuck me just a tad out there, but we'll see what we can do to get that up into the top 5 slots as well. So really, it's all because of the opportunity that Tom gave to me. It was something he threw out there. I believe in life everything happens for you, not to you. And it was a conversation that he and I were having on a Sunday when he made a nice little breakfast out there, and it was the opportunity to come work with him, rub elbows, be side by side, and so I relocated to Clearwater for a while. Proximity is power, folks. You can teach that to your kids and teach it to everyone else. You know, if you wanted to be if you wanted to be on Broadway, it does not do you any good to be in Kansas City. You got to click those heels and move to Broadway or move to L.A., right? Proximity is power. Now, the cool thing about the internet is that power is brought closer to you. So proximity is power. Tonight, you've got Basil Chapman doing a workshop. If you want to be able to hone in your skills when it comes to, if you want to be number one at what you do, then I suggest you go to that workshop. If you want to learn my tools, I suggest that next Wednesday you go to that workshop, and you go to every other workshop. You consume as much information. If you do that, you'll be as good as the guy that's on the line out here, and that's John from Philly, who's calling in because he probably was celebrating. He was up till all hours of the evening celebrating the win for Villanova. So John, thanks for calling in. How are you doing today?
Those guys, they go to practice and they stand 100 feet away from the basket and see if they can make it. And evidently they can.
They can, and they can do it often, and they do it with pressure on.
Yeah. Exactly. Yeah. Yeah. That was very special. Certainly, Philadelphia is very festive here in March, just as it was in February after the Super Bowl.
That's true. That's true. You guys are. So what's up? Let's see. We've got the hockey season. The Flyers, I think, are up there in the playoff contention, right? So we'll see if they can do a three-peat.
Say, Steve, well, let me ask you. I wanted to ask you about a market, but before I do, on Timer Digest, two quick questions for you on your rankings. Congratulations, by the way.
Thank you.
First question. The trades that you do, long and short, on the S&P 500, what is the average duration of a trade you take? A day, a week, a month?
It just simply, for the signals, it just depends on the signals of the market. So quite frankly, since the top in January 26th, we've been in this like consolidation type market. I've had calls that have been switching back and forth between bullish and bearish. It's just really market conditions. For example, in gold, they have remained bullish for quite some time. I can't give you, I don't know what it is off the top of my head. How long that time period is.
How about roughly? All I'm looking to get a sense at for me and your listeners is, are these 1 week trades, 1 day trades, just
more than a day?
Typically. Guidance.
Yeah, no, typically more than a day. And the idea is, and the thought process is, that the majority of subscribers are managing intermediate to long-term funds out there. So it is intended to share with them a set of tools, if you are a day-ish type trader, to then provide you with the set of tools to use in order to manage those trades. And then to step up and take a look at the longer-term time frame to help you understand what's going on in the S&P, what's going on inside gold, what's going on inside bonds. And I think the Timer Digest does that to deal with kind of the thought process of having a portfolio that's mixed between stocks, equities, and commodities out there. And so they've just simply chosen, those three things. So it really is about market conditions. And at this stage here, I try not to change them too quickly. But if the market is communicating to us, it's really incumbent upon, I believe, myself to say, okay, right now the market's giving me this information, and so what does that say? What does that mean for you today, even if you're in a trade? So I hope that
Thanks on that. The follow-up, Steve, is, are the trades executed by you and your clients and tracked by Timer Digest, are these limited to exclusively 9:30 to 4 p.m. hours, or sometimes overnight via futures and what have you?
The signals are taken as of 8 o'clock every morning. So it's from 8 o'clock, and you don't change your signal until the earliest that you could change your signal would be 8 o'clock the next day.
Very good. Thanks for that elaboration. I appreciate that.
So in the middle of the day, if I wanted to, go ahead.
I'm sorry. I apologize.
No, I was just going to say, in the middle of the day, if I wanted to change positions, it's not going to impact Timer's Digest signals.
I see. Thank you for that elaboration. Now, the reason for my call to ask you, market-wise, The Dow Jones Industrials. Steve, full disclosure, I'm flat. I covered shorts yesterday. I did a scalp or so today, but I'm flat just looking. I observed yesterday the Dow Jones made a low at 23345 versus the February 9th low at 23360. Effectively, well, within 10 points, the same price. Question, is there the potential, or do you see anything that in your work that can give us clues as to whether or not that is a double bottom rather than just a short-term low?
The answer would be if price were to close above my little red line, referred to really, it says the oscillator unchanged line. If we're to close above that, 24,025 right now, and that'll change over as price moves, it'll change slightly. But if price were to close over that level, that would be a clue, another clue that yes, there is at least a short-term bottom, with the run back to the swing point back in the end of February. Do you want to stay on the line and we can continue discussing this?
I'd love to listen. Thank you, Steve.
Okay, we'll be right back. Steve Rhodes with TFNN. Dow's up about 215.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back up, folks. Dow's up about 200 points out here, and we're taking a look at the Dow. The question posed to us was, is there a possibility that there's more, that there yesterday was in essence a double bottom inside of the Dow? And one of the other things that we know about the Dow, John, is that price has been moving lower with less relative energy. Now, when it does that, what we like to see is we like to see some type of bullish reversal signal, such as this little bull sash candle that formed out here inside of the Dow on the trading day of March the 26th. That was an indication that there may have been a bottom. What then needed to happen was price then needed to be able to close above Stevie's red line. We could see on the very next trading session that price had moved up. In fact, up until, because I was long on this trade at that stage, up until about 2 o'clock in the afternoon, sometime right around there, 2 or 3 o'clock in the afternoon, price had moved above that level. Looked like we were getting follow through. But by day's end, the market went ahead and sold off, and in fact, that became a resistance level. We can see that it acted as resistance 2 days ago. It acted as resistance yesterday. So I say that the very next thing that the Dow would need to do in order to say, okay, maybe there is a bottom, it would need to close above that 24,025 level. That would be the first thing. I'm sure that you also looked at the volume inside of the Dow Diamonds. And yesterday, the Dow Diamonds actually got down and tested that low from February 9th, which was 19 million shares, and tested it with 9 million shares. So 50% of the volume. And Tom has taught you and I, right, if it can't bust them to the downside, it's going to go try to bust them to the upside. But I don't think that bust them to the upside can take place until price closes over again that oscillator and change line. That's what I see right now. What say you?
I respect that double bottom because of that lower relative strength and the precision in price, the price proximity of those two. At this moment, I haven't gotten my head wrapped around the bull scenario idea, but I did want to flush this topic out and ask you to address it. Just in case it emerges with a Dow double bottom and rally, so I'm prepared as compared to being flat-footed. So,
yeah, I still kind of think that I still think that the real key here, now on the 30-minute basis where like the ES and the NQ, you and I took a look at it, we know that it made its 7th wave peak at the high so far today. The Dow Equity Futures contract hasn't done that. Pretty good chance that it will, although you respect that 6th wave, letter F, that we can see on our chart out here. It hasn't like it's been an explosive move off the bottom. So it really does make us want to sit back and really think about that. Is this a bottom or not? And really try to get some other signals out here. So I still believe that the NQ, I know you're asking about the Dow, but I just think that it's going to be very difficult for these markets to move higher without the NQ doing that. You know, whether that's going to be a result of people putting earplugs in their ears as the president, attacks Amazon or whatever it might be, whatever influence that might have. I really think we need to see the NQ, especially when you know, and I know, that it's got that island top that's hanging out there. So that's what I'm looking for. I'm really looking for signals inside the NQ more so than any place else at the moment.
Steve, thank you very much. It's very thorough. I appreciate that. And congratulations on your Timer's Digest performance. Terrific.
Thanks. I appreciate that very much. And thanks for calling in. We've also got another caller on the line. It's Dan in Miami. Dan wants to take a look at the gold contract. Dan, thanks for calling in. Thanks for holding. How are you today?
Good. How are you doing, Steve?
Very
My
good.
question is, I'm concerned why everyone's so constantly bullish on the gold contract. I'm wondering what you think is a likely scenario going forward. What I see is, on a daily gold contract, which I use most of the time, is I see 3 lower highs, one end of January, like the 25th or something, and February 16th there was another lower high, and last week there was 2 days at 1362. If you draw a line between the 3-2, you see a downtrend line. What do you think would be the likely scenario going forward? I listened to Larry's show this morning. He wants to buy gold contract a lot lower. I'm wondering what the likelihood is it does indeed go lower. What do you think happens in the next week or two? I would like to buy it also, and make no doubt about it. I've been waiting and waiting, but...
Yeah. So you started the conversation off with why everybody is so bullish on gold. And I kind of interpreted that, maybe it was the wrong interpretation, as more of a longer-term outlook. So why don't I just start there and share with you longer term what it is that I see, and then we can come back and take a look at, what maybe is going to take place over the next couple weeks. Is that okay?
Sure. Well, another comment. I'm wondering, gold seems to be related to inflation and the dollar and the fear trade. I'm wondering minimal inflation going forward. And fear, well, that speaks for itself, but we're not going to bother with that. Yeah, go ahead.
Sure.
Thank you.
Oh, sure, no problem. So this chart, Dan, that's on the screen right now is a monthly chart of the continuous contract for gold. And if you and I were trading this back in the 2002 time frame, what we would see here, one of the tools that I like to use the price oscillator. That's the difference between two exponential moving averages. The ones that we like to use are 19 and 39. Doesn't matter whether it's a daily, a weekly, a monthly, a 5-minute chart out there. We just simply go ahead and keep those same parameters. What occurred back in 2002 was the price oscillator, bottom panel of our screen, started to get to the zero level. And when price gets to the zero level utilizing this tool, you can expect, does it happen all the time? No. But such a high percentage of the time that what you can expect is Stevie's red line, that's on the actual price chart, that and price are going to catch up to each other. And when they catch up to each other, there's a test that's performed. And if it's a test and rejection, a bullish test would mean it comes down, tests that red line, and bounces off of it. That would be bullish, and that would say, okay, now we have a rising price oscillator above zero. Rising price oscillator above zero is bullish. A falling price oscillator below zero is bearish out there. The exact same pattern finally occurred back here in December of this year. So in last year, December of 2017, we had that exact same pattern play out. So for me, as long as gold stays above 1298.40, that's the price right now, this remains bullish. And this says to me, gold is giving you and I the signal that it's going to go back to its all-time highs, and I suggest even take it out. That is longer term. So I want to come from the longer term period first, just to understand what where the underlying thought process is. Now the question is, hey, what's going on you asked me the question, what's going to occur over the next couple of weeks? The one pattern that I would take a look at is what has happened the last 3 times, and now would be 4 times, when the Fed has raised interest rates, its Fed funds rate. And Dan, I'm going to ask you to stay on through the break.
Sure.
We're going to go answer that question for you and everybody else, because I believe that same pattern is unfolding right now.
Okay.
We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with Dan from Miami, where they just held that great tennis tournament in Crandon Park out there, and this was the last year for it. They're moving to the football stadium of all places, Hard Rock. I can't picture that layout versus the Crandon Park layout. But if you lived over in Key Biscayne, you're probably glad that it's gone from a traffic standpoint. But boo-hoo. Now, Dan, you and I were talking about gold. And are you able to watch us on Tiger TV by any chance?
Oh, yeah, but not today because of the sound issue. I can't follow your charts immediately, but I'll go back and watch the show again.
Okay, so the chart that you and I are, in essence, are talking about right now is showing you the each of the dates on here are the most recent Fed hikes, beginning December 17, 2015. And what you will see is the Fed announced their rate increase, and gold just simply moved big time to the upside from about 1040 to 1360, give or take. There was another rate hike on December 14th, and gold moved lower. Nothing substantial, probably 1180 to 1125, somewhere around there. March 15th was another rate increase, and gold moved from about the 1180 to about the 1280, so about $100 an ounce out there. But in essence, it made a bottom. June 14th, 2017, another rate increase. Gold pulled back, made in essence a double bottom. It was from about the 1260 to 1220, 1218 level. Nothing huge to the downside. Then December 31st, 2017, nice little V bottom that gold created out there. So there's another higher low inside of the gold contract and move to the upside. Now, the reaction that we have seen thus far on March 20th, when the Fed announced another rate increase, we saw gold go ahead and move higher. Here's the one thing that I can share with you that gold had in common on December of 2015, March of 2015, and December of 2017. And that is, as gold was moving higher, priced in dollars, it was also moving higher, priced in euros. And that's what we really need to see. And you are right to be suspect out here whether or not gold is going to be able to really bust out right now. If the most current rate increase is going to unfold and give us that next bottom, what you really need to see is gold close above 1107.70. That is priced in euros. So it's not the 1336 that it's trading in right now, but 1107.70 euros. So we'll call it 1108 is where you need to see gold close above. If it closes above that, then we have a breakout that is continuing inside of the gold contract. If you're trying to buy it at a lower price out here, about the only thing that you and I could really do, or one of the things that we can do, is go take a look at where gold is trading in relationship to its market profiles. And the best buy point at this stage on a pullback is 1322. 1322.40 to 1324.20. 1330.20 might hold, but that would be the range. But that would force you to, and I would then ask you the question, is there a reason that you would be buying gold versus the mining equities? That would be the question I would pose to you.
Well, I trade the futures, but
okay,
that's about it.
That's the answer. Okay, then that's perfect. Because what I would share with you, and that's a good answer, so thank you for answering that. If you were looking from a longer-term standpoint, what I would share with you is that if this is a bottom, mining equities will outperform gold on the move up by as much as 5 to 1. But if you're not
really
trading the equities...
Do you believe that?
No, I don't believe it. I know it. And the reason that I know it is because we can go back and take a look at history. Now, I don't have that chart real handy, but you can go find this out yourself. You go back and take a look at gold's bottom in December 2015, all the way to the high that was July 7, 2016. Go take a look at gold's rate of change versus the rate of change in the mining sector. You can choose the XAU, the HUI, the GDX. Don't use a triple or something like that, but go take a look at the mining sector. Now, look, you're trading the gold contract, so you're leveraged out there. I'm just talking about one-for-one equal dollars put up. The mining equities will if this is a real bottom, mining equities will outperform gold during that time period.
I see what you're saying. That's certainly interesting. Thank you for saying that, yeah.
So that there's another clue there, because if you get into a long gold position and you see that, you know what, the mining equities.
I can certainly do both, as a lot of people can do. So yeah, that would be a definite good thing to have, I guess, right? 5 to 1 outperformance.
Yeah, it's at least 3 to 1. So you go back and take a look at, and so for the longer term piece, let's say you were going to take a position in gold inside of a retirement account or something like that, and so then instead of buying the GLD, we'd say, wait, take that money and go buy the GDX. As an example, go buy the basket of mining equities out there. So just something to think about. And the other clue, Dan, is that when you get into a gold trade and you see that mining equities are not outperforming gold, it's kind of a clue that the move is running out of gas.
Okay.
Okay? Does that kind of...
Certainly interesting. Thank you. Yeah, I appreciate that. Yeah. Okay.
Yeah, no problem. No problem. Thanks for calling. Thanks for listening. And you live in a beautiful place. About the best place on the planet other than Hawaii. So thanks for calling. That was Dan. That was Dan in Miami. And there's a question from Danny, silver. So if we take a look at silver, Danny, just to see where it's trading, what it's doing out here, I suppose the one thing that you and I like is that today's move on the pullback, and it's trading around 1638, was nothing more than a test of Stevie's red line. That doesn't mean you jump out and you buy it with both hands or anything like that, but at least prices come back to a level of support. We know that it's broken through a descending price channel, above a descending price channel, so maybe short-term bullish, but we can see where the bears are lined up. You can see where those bearish candles are. 4 or 5 trading days ago, that bearish engulfing candle, go back into the early March level, March 7th. You've got a nice little dark cloud cover. So there's resistance in this $16.80 to $17 area. If you and I go take a look at the market profiles for silver, let me see where I've got those hidden. They should be right here. And if we take a look at silver, let me put the synthetic contract up on my screen for a moment. Yeah, so this is going to give us the levels that you would be focused on and paying attention. Just want to get this daily chart here to populate. So what silver needs to do, what you want to see it do, in essence, is close above 1682. 1682 is the bottom of the weekly profile. And you can see here, Danny, how that has really been a level of resistance. It's been a level of resistance for months now, ever since, this is the weekly chart, ever since the week of January 29, 2018. So closing above that level, 1682 to be exact, would then say you get a run to $17, and then likely 1756 out there. Above 1756, would be nice and bullish for silver, for high-ho silver out there. So those are my thoughts on the metals market, the mining market, and that's coming to you from a guy who over the last 12 months inside Timer's Digest has been #1 for gold. Now, how do you think that happened? In 2009, I moved over to Clearwater to spend time with Tom O'Brien, who in 2009 was the gold timer of the year. You don't think proximity is power, folks? It is. See Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it, so call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, so thanks so much for being here. If we take a look at the New York Stock Exchange, NASDAQ Composite, and the Dow, those are 3 of the panels that are on the screen right now. What we're really focused on, because the question that John in Philadelphia asked is it possible that the Dow formed a bottom? And if it did, we're going to see its advanced decline oscillator reading close above 0. Does it have to do it today? No, but it needs to do that in order to, and then at least say price is going to go bounce into the descending channel line. That's the red diagonal line that that you see on my screen right now. That price level is, we'll call it around 24.6 something out there. We'll know if price is able to close above that, then we have even more of an answer. But the very next thing that it needs to do, and it's close to doing it, as far as how many issues right now today are green inside, you've only got 3. You've got 3, which is General Electric, Disney, and IBM that are trading just a tad lower out there. If one or two, I think probably if 2 more of those issues were to go green, and GE's down 10 cents, so that's doable. And Disney's only down, it's easier for Disney and for IBM to do it. They're only down 0.4%. Then that summation index would turn green, and that advanced decline oscillator would get above 0. NASDAQ Composite isn't doing too shabby, believe it or not, as far as its advanced decline information, and the same with regard to the New York Stock Exchange. They're not above 0, but if they do get above 0, that would be one check mark. Okay, continued move higher. In order for these markets to really move higher, though, the VIX index is going to have to get back in line. Right now, it's trading at 2181. That's above its 3-month contract. That's above its 6-month contract. It will get back in line. The question is when, because those are trading at 2144 and 2157 respectively out there. But the real key number in the spot volatility index is 1856. That's its 50-day exponential moving average. It must get down below that line. Today's reading, 1856. Tomorrow will be something different out there. So, folks, thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, he's up next. It's David White. Come on over. Sign up for Mastering Probability so you can attend next week's workshop, How to Spot a Bear Market. That would be important, don't you think? Hey, don't forget, Basil Chapman's got a great workshop tonight. Proximity is power. This is the place to be. TFNN.com. Have a great day. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.